Hi everyone, and thank you for returning to Everything Tesla Stock. You are undoubtedly aware of how unstable the stock market is if you follow it closely. The majority of investors in some of the best firms, like Tesla, have left because they all sold their stock to avoid losing money. Nevertheless, ARK Invest and other investment firms continue to be ardent supporters of Tesla despite all of this. According to them, Tesla's stock is expected to rise even further, to $10,000, beyond its current level. However, when and how? What precisely is the cause of this? Could this be true based on the information they've provided to back it? Let's investigate. In its Q1 2022 income report, Tesla achieved record highs despite the current market decline. On April 20, 2022, Tesla announced a $3.3 billion net profit for the first quarter of 2022. This quarterly record was higher than anticipated by Wall Street. You've undoubtedly heard of ARK Invest's most recent stock prediction on Tesla if you follow the stock market. By 2026, Tesla's incorporated shares should have quadrupled to almost $4,600. This was stated by ARK Invest Management's Cathie Wood. On April 14, ARK unveiled their upgraded model, which costs more than 4 times what it does now. ARK had projected last year that by 2025, Tesla's shares would have increased to $3,000, but because of its updated assumptions regarding the company's future robotaxi operation and capital efficiency, it has since updated its prediction. The true query, though, is, what presumptions are these? How is it possible for ARK Invest to arrive at these figures? ARK is holding on to hope for Tesla's completely autonomous driving capabilities despite the fact that everyone else, including the government, is beginning to lose faith in it. They are actually more optimistic about it now than they were previously. As a result, in its most recent value estimate, ARK has taken Tesla's prospective robotaxi business into account. As per ARK, this has the potential to propel Tesla shares to $4,600 by 2026. The company recently released an analysis predicting that by 2025, the share price will increase to almost $3,000. In spite of this, the company now projects a price of roughly $5,800 by 2026. In light of this, ARK has said that they still think the Tesla model is methodologically conservative, even though their projections for 2026 are calibrated. They have projected that in 2026, Tesla stock will trade more like a tiny company than a fast-growing one. Analysts always weigh a number of important factors before deciding on a price target. Businesses' opinions of Tesla's fully autonomous driving capabilities and potential robotaxi company are divided. Some include it in their price targets, while others do not. This could be mostly due to the technology's lack of functionality, despite CEO Elon Musk's repeated assurances that it will be available by year's end. Musk has been extremely upbeat on social media, but there are still a lot of unanswered questions about the status of FSD's beta program and the likelihood that Tesla would launch a robotaxi service. For ARK's bullish thesis to come true, Tesla must be able to build and operate a network of autonomous robotaxis. The network of cabs would provide self-driving services similar to Uber. According to ARK's research, they would take passengers to and from different places. Based on ARK's simulations, the business anticipates that by 2026, electric vehicles would account for approximately 57% of its revenue, albeit at a lower margin than that of robotaxi sales. In fact, according to ARK Invest, the company's robotaxi activities will account for almost half of its projected earnings in 2026 and approximately 60% of its estimated value before depreciation, amortization, interest, and taxes. Musk announced that a project of that nature was being developed at the opening of Data Texas. However, before delving more into ARK's present price objective, it's critical to keep in mind that previous versions of ARK's prediction algorithms raised a great deal of investor suspicion. Wood has been a longtime supporter of Tesla and Elon Musk, the company's CEO. The flagship ARK Innovation ETF cut its holdings in Tesla this month. Even so, the manufacturer of electric vehicles, which holds 10% of the company's assets, remains its largest stake. Before the massive stock price increase of the pre-split run-up, ARK CEO Cathie had projected a price objective of roughly $4,000, or about $800 after a 5-to-1 split. Back in 2018, the pre-split price of Tesla's stock was approximately $5,000, while the post-split price was approximately $1,000 as of mid-April 2022. In 2018, the majority of people found the cost unbelievable. It was shocking, to be sure. Tesla's shares reached an all-time intraday high of $1,243.49 at the beginning of November. Since the start of the year, the war between Russia and Ukraine has resulted in shortages of components, inflation of input costs, and macroeconomic worries, all of which have put significant pressure on the stock. But once it bottomed out in late February, the stock was able to rise through March and the first part of April. Later, Tesla's stock price dropped by 3% following Musk's announcement of his offer for Twitter. The shares ultimately closed at $985. At the most recent closing price, a $1,000 investment in Tesla shares would have yielded around 1.2 Tesla shares by 2026. The identical stock will be worth roughly $4,692 if it is held for the following 4 years and it truly reaches ARK Invest's price target. We are discussing an investment return of 369.2%. It's crucial to keep in mind that ARK employs a statistical technique to provide a range of situations in their research. The quantity of cars sold and their average selling price, in addition to other important business factors, are some of the inputs employed in these situations. Based on these presumptions, they discovered the probabilities of different scenarios. The most crucial thing to keep in mind is that Tesla's car business and robotaxi potential are the foundation of this plan nearly entirely. A few things are absent from this model, though, such as Tesla's AI as a service, a robot that primarily resembles a person, and the company's renewable energy division. From ARK's perspective, it makes perfect sense to leave out these commercial elements when discussing 2026. This is due to the large degree of uncertainty involved in these components, which would cause the model to become excessively volatile. For instance, Tesla has prioritized the automobile industry in recent years. Because of the limitations on the scalability and availability of the battery, we might actually witness this happening in the future. Moreover, scaling up is made more difficult in the solar industry by the requirement that solar panels still be installed by a third party. Elon Musk claims that licenses for Tesla's software, including its AI training system, are available, but as of yet, no possible alliances have been disclosed. Furthermore, it is challenging to predict the humanoid robot's timeline. Tesla has faced numerous challenges in developing its vision-based artificial intelligence for fully autonomous driving, experimenting with various approaches. It always appears as though they have achieved a breakthrough at some time. But eventually, the humanoid robot won't be able to hoist the vision-based AI that Tesla is trying so hard to develop for its cars. Essentially, there won't be a robot without AI vision. ARK Invest is still of the opinion that there is significant upside potential for Tesla shares, despite all that is happening with the company. By 2026, the company might use their system to bring in up to $485 billion in revenue annually, based on ARK's bull case scenario. According to ARK, Tesla's network of robotaxis has the potential to bring in over $51 billion in revenue annually. The worst-case situation is this. In addition to all of this, Tesla's sales of electric cars accounted for the majority of its $54 billion in revenue in 2021. The primary concern that remains for investors, though, is when Tesla will be ready to offer completely autonomous vehicles, let alone a system of self-driving taxis that can travel between towns, cities, and even nations. In the worst-case scenario, according to ARK, a self-driving taxi network would probably be up and running by 2026. According to ARK Investment Management, they have fundamental advancements in AI in addition to the commercial releases of Waymo and Cruise, which have strengthened their current perspective. Based on the middle of their estimates, Tesla is expected to start offering autonomous ride-hailing services for sale in 2024. ARK's bullish stance on Tesla shares makes it evident that the electric vehicle manufacturer is the investment manager's largest holding across all of its exchange-traded funds. According to Coifin data, ARK owns over $1.43 billion worth of Tesla stock, which makes it the only stock in the company's flagship exchange-traded fund that has performed well in the past year. It's clear that Cathie Wood, the CEO of ARK Investment, will always be in favor of Tesla. They will support the business and have nothing but the best intentions for Tesla, no matter how long it takes. What are your thoughts on this then? Tell us in the comments section below. Do you believe purchasing Tesla stock is a wise investment? While you're here, click on one of these two videos to view it on your screen. I'll see you over there.